Okay, good afternoon, everyone. This is Nate G. This is the session for the afternoon on Friday of the open house. We're going to talk about how to pair the perfect option with the perfect chart. And in the middle of that, or towards the end of that, I'm also going to put on a potential butterfly trade for a potential pen on the SPX, which we'll talk about. Right now we're looking at kind of 7790 and 7800 levels as the two largest gamma exposure levels right now. 7700 is still the largest. 7790 is still the largest. So we might be kind of splitting the middle and kind of seeing what that turns into, which, believe it or not, if we get a bounce of some sort, which we would have to get there by the close, a lot of times we close kind of near VWAP, right? Because VWAP is volume weighted average price for the day. So if we did get a bounce and this thing started to plane and maybe turn up, where does that leave us into the close? Kind of right around that 77.95. So if you're comfortable with the butterflies, I do like that trade kind of right in here. You can put that on. I'm not going to do that until a little bit later into the session, though. And so if we're, all of a sudden we get a little spike up, that's going to be a much more expensive trade than it is down here. But keep in mind, it is a lotto style trade, right? We only want to risk what we're kind of willing to lose. And the payout is great if you can hit it, but they're maybe a 35 to 40% win rate type of trade. So it is more of a lotto style. Okay, so let's talk about, from a TPS perspective, let's talk about how do we set up a trade and find the appropriate option for our chart, right? So here's J&J. Actually, let me put it on a different chart so we can talk about that. So here's Johnson & Johnson. It's on a daily squeeze. I'm assuming it's in a daily squeeze. I don't have my chart up, but this looks like a nice chart on a daily squeeze. The only thing that I would say here is, we did spike up higher in the middle. So what we could be forming potentially is a head and shoulders if this were to kind of spike up. And then, we would be, that's usually a bearish sign. But this was kind of the daily squeeze that I could find that we could talk about this concept, right? So the concept is we want to be aware of the time frame chart that we're playing. Okay, so if we're playing a squeeze, let me just put the squeeze on here. Let me get rid of the sniper. Bye-bye, sniper. Okay, here's the squeeze. And so we're in a low compression squeeze on the daily, but we're not into the red dots on the daily. Let's see, what do we have? We have a 30-minute squeeze. We have a 15-minute squeeze, 2-hour squeeze on this chart. But what I want to talk about, so like if we go to a 130-minute squeeze, we're getting a squeeze in this area here, right? And so you get this sort of spike up, right? Consolidation, squeeze. And when we're playing a squeeze on a longer term chart, daily, 195, 130, does everybody understand the chart time frames that we play for TPS? So we all understand, put a 2 in chat if you don't know what a TPS trade is. This is Nate Bear's signature edge, right? 2 in chat. Okay, so if you don't know what a TPS trade is, it is his signature trading edge. we are looking for a trend, right? This is in a trend up, right? It's also in a trend up here. So T stands for trend. And then we're looking for a pullback and a consolidation near that high and near the averages. So we're looking for a trend and a pattern for P, right? Trend, pattern, and then we're looking for red dots on this indicator here for a squeeze, right? So that's trend, pattern, squeeze. So that's the TPS trading method. Now, when we're trading this, we can find squeezes on daily charts, on 195-minute charts. My personal favorite is a 30-minute chart. Those tend to react pretty quickly, and I like to be in and out of trades within a couple of days. So trend, pattern, squeeze, that's what Nate's been teaching all week here in the open house. And we want to pair the time frame chart that we're using. So if you're newer to trading, you're probably only really familiar with a daily chart, right? That's what standard is. You will look up when you look at charts. If you search them on FinViz or anything else, then you can pick different time frames. I go all the way down to a 1-minute chart for my snipers, right? This will be posted on YouTube at if somebody could drop in that my YouTube NateBot link, that would be great. This will be posted there, right? So time frames are the candle time that is showing currently. So in this, I'm on a 30-minute candle. That means 30-minute time frame. That means each one of these candles is 30 minutes in time. Okay. If I'm on a daily, that means each one of these candles that's showing is showing a full day. So let's back up really quick. If you don't know how to read a candle in trading, put a 9 in chat if you don't quite understand what a candle means for trading. Awesome. I love that people are having a growth mindset is so important in trading, and we all, you don't know what you don't know, and then the more knowledge you have, the better you're off. Okay, so let's talk about that. So a candle, and I'm gonna do a little drawing here, is the information, the trading information for a certain period of time, right? So in this case, I'm on a daily chart. So each one of these candles represents the price action for that day, right? And the way we can kind of tell, and the reason I like to use hollow candles like this, a lot of traders like to use colored candles where green is up, red is down. But I like to use hollow because at a quick glance, the hollow candles are price action has moved up throughout the course of the day, and solid candles are price action has moved down. Now, if you get a green solid candle in this, that's a little different, and we'll go over that in a minute. But solid is down and hollow is up. And so as we draw a candle, so I'm gonna move all the way over here so I can kind of show you how this works. So if I have a candle on the chart, right? So we have a candle like this. Let's say it is a hollow candle. I'm going to draw them big so we can talk about them. The hollow candle that has, sorry, I'm gotta figure out my drawing tools here. That has a wick like this and a wick like this. Okay. That's a little crooked wick, but you get where I'm going with this. If it's a hollow candle, it means opening price for the day happened right there. Okay, that's opening price for the day. Closing price for the day happens right here. closing price. The wick is the high of the day, the highest price of the day, and the bottom of the wick here is the lowest price for the day, okay? So what this candle looks like, let's say this is a daily candle, this candle probably looks like this. We open at this price, maybe we pull up, right, over the course of the day, right, or the morning, we come down to that low, right, and then we hit a massive move higher over the course of the day, let's just say, right, we're on a 1 minute, we come up and we make a new high, and then we sell off into the close, right? So here's the close, here's the open, here's the low of the day, and here's the high of the day. Okay, does that make sense to everybody? So the body of the candle is from open to close, right? That's this spot, and any price action outside of that is your wicks. Okay, so that's on a daily chart. Well, what happens when we look at a 5-minute chart? Okay, so let's look at a 5-minute chart. If I could get my trading view to work properly, that would be fantastic. It would make this lesson a lot better earlier, my God. Okay, so let's talk about a red fill candle, okay? So let's say we get a candle like this, right? We'll actually draw this candle right here, okay? So we have a red candle, it's a solid candle. I'm not gonna fill it in, but you can track what I'm saying, okay? So we have a red candle here, right? And we're drawing this candle basically, right? That means if this is filled in, right? So that's red. Excuse my primitive drawings. This is the open price, right? This is the closing price. And this is the low of the day. Well, where's the high of the day? Right? The high of the day is the opening price because there's no wick, right? Let's see if I can undo just one thing. Yep, good. So there's no wick. So this is the open, this is the close, and this is the low. Is that for the day? No. That's for the past 5 minutes, or in this case, 20, 30 minutes ago. But during that 5-minute time frame right there, this is the price action that happened. So if we're on a 1-minute candle, right, we started here. If we're on a 1-minute chart, we started here, we came down to here, and then we closed up to here within 5 minutes, right? Open, close, low. Any questions on that? So within a day chart, you have hundreds of 1-minute candles, right? So when we look at today's chart for J&J, we're just using that as an example, right? Today's chart for J&J is a very daily candle, is a very small body, almost a doji candle, but not quite, right? A very small body and a wick on either side. That tells me that if I look at a 1-minute chart for today, price opened and is currently at, right? This candle hasn't closed, so this is currently moving. Opened and is very close to its price that it opened at, and it's gone down and it's gone up and it closed, and it's near its opening price, right? So this is daily. Now we jump over to a 1-minute candle, and what did I tell you, right? We have our opening price right here, right? We have our current price right here, only slightly above it, right? Like this. And this, that makes the small body, and then our wick up to here, So if here I can draw our bigger body to make it clear. So the body of that candle is right here. A little lower, sorry. That's the body of that candle, very small. And then we have our wick up to the high of the day, and we have our larger wick down to the low of the day. So that's how smaller candles, 1 minute, 5 minute, 30 minute, smaller candles can inform what the larger candle that you're looking at is. So the green filled candles, that's a great question. The green filled candles mean that price opened and closed above yesterday's opening and closing price. So those can be kind of confusing, right? So in like today's candle, for instance, so far, it's not done, but so far is down, is red, right? Is red, but it's an open candle. So that means it's a red candle because it's below open and close price from yesterday still. But it's gone up on the day, right? So price is higher than the open on the day. But from day to day it's lower. So in this case, in this green close candle up here, price finished higher than yesterday's, right? So it needs to be green, but it was a red candle in the sense that it opened above its close price. Does that make sense? Okay, so that's how we look at candles, and that's the information that candles give to us. Right? So when we have small candles consolidating sideways here, that means that we're consolidating, right? And that we're kind of bouncing between a support and a resistance level, and things are quiet, and that's when we want to get into TPS trades, right? Trend pattern squeeze. We get the squeeze when things are quiet, right? A closed candle means price moved down on the day from open to close. An open candle means price moved up on the day. It's that simple. Default charts are usually like this, right? Which if it's green, it means it moved up on the day. If it's red, it means it moved down on the day. But I use open because then I can see, it's just easier for me to see that. I like it better. It's just a preference. Okay, so now when we look at a daily chart, we have one candle showing per day's trading activity. One candle, right? That's why it's a daily chart. And we look at a 195, that seems like a 195-minute candle. That seems really odd, doesn't it? Why would you look at a 195-minute candle? Well, there are 6.5 hours in a trading day, right? So if there's 6.5 hours in a trading day, then 195 minutes times 2 is going to give you that 6.5 hours. All right, so you're going to get 2 candles per trading day, 2 exactly perfect candles in a trading day on a 195-minute chart. So we label our charts with 195. We also have a 130. If you do the math, a 130 gives you 3 candles per trading day, right? A 78, you get 5 candles per trading day. See, you can see these dotted lines are trading days, and then these are the candles within. A 65, right, is 6. And then a 30, you just keep going down, but it's just more candles per trading day, right? 15, 10, 5. And so we use all of these time values for the day to find squeezes that we're looking for and play off of those charts, right? And once you get comfortable looking at these different time values for your trading, you can start to see patterns developing within a 78 minute that you can see already on a 30-minute chart or on a 15-minute chart. You don't have to then go look at the 78-minute chart. You're already good to go. You can just see what's happening. Now, how, when we're taking a trade on a 30-minute chart and we want to know what option we want to trade on a 30-minute chart, that option strike is not going to be the same as if we're trading a daily chart. Okay? Because let's just say we're playing Johnson & Johnson here for a move, up into 280 up here, right? If that's the case, it's probably not going to go to 280 today, right? So playing a 0 or 1 DTE option, expiration for this week, makes absolutely no sense from a TPS perspective on this kind of a chart, right? On a 1 minute, right? If you thought, okay, on a 1 minute, I think this is going to go to, 262. Well, that's probably going to happen in the course of today. You can play a 0 DTE option or a 1 DTE, right? And you're basically buying time. So if we're looking at J&J and we say, okay, I want to make a trade on this on the daily chart, that's going to take a while. Like some of you might have taken this GM trade with me earlier today. This is a great example, right? This GM trade is, a squeeze on 78 and 130. I should probably check that just to make sure. My eyeball says it is. That my eyeball is not always correct. I've never been wrong a day in my life, but I might today. Let's see. Yeah, we got a squeeze on the 195. We got momentum shifting here, right? But we're playing a 195 chart, 195-minute chart. So I don't want an option that's expiring next week. I want to give myself time on the option. I'll pay up a little bit. When we first put this on, it was trading at 227-ish. I had to kind of pick a mid price because the spread was, 10 or 15 cents. But I'm hoping this moves up into this recent high and then up into that 95 level. But I need to buy enough time because option prices decay due to theta, right? And the closer you are to expiration, the quicker they decay, right? So today's option will be today's option is going to decay significantly faster than anything else, right? My September 4th options, even if nothing happens today, which is what's happening, aren't going to decay all that fast, right? So I'm not too worried about that today. If I get close to September 4th, then we're in an issue. Can I explain the difference between red and yellow squeezes below the line versus above the line? Oh, yeah. So the below the dotted line and above the dotted line are simply momentum, right? So this momentum spiked up and then it kind of rolled over. We start to form a squeeze. What we're looking for is kind of a red to yellow turn, so that momentum is going to start swinging us back up. That's if we're long, of course. But you generally, if you're playing momentum, you want to be going from red to yellow when you put on the trade, if possible. And sometimes you might get momentum up here and it might consolidate again and might go like this. And then eventually you get your bigger move and then price starts to move in that direction, right? So it's just that's just helping you time momentum, but you're looking for the dots to show we're in a squeeze and we're consolidating. Okay. Does anybody have any questions on that? Yeah, the GM trade's going to be a nice, slow, conservative trader, right? But if you took it and you're not in here next week because you didn't sign up, you need to be able to manage this yourself so you know what your stop loss is and you know what your price target is, because there's going to be no one there to tell you that they're taking it on or off. But I would also argue when you put on trades like this, you need to make sure that you understand what your price, what your risk tolerance is, what your stop loss is, what your price target is, what you're going to do if this happens or that happens, and that's called making a trade plan. And making a trade plan is marking up your charts like this, writing what you're buying, where you're stopping, where your profit targets are, so that when you come back to the chart, if you come in one day and the market's up or the market's down, you can come back to your chart and go, okay, this was my plan, so I need to stick to my plan. Lars, I did the GM trade on the mic. So I don't post my trades in the trades tab like Nate does. D-Man and I put them in chat or we do them live on the mic. But it's right here. All the information is right here, and it's still in a great place, great risk reward spot. It's basically where we bought it. Okay, but when I look at strikes, right? When I look at strikes on GM, so I took a more aggressive approach. Right, I took the August 21st, but in here we talked about taking the September 4ths, right, which are 21 days out. You can see if we're taking the 87 strike, right, it's less expensive today. The 87 strike that expires today is almost worthless at this point. That strike that expires next week is worth $1.28-ish for the mid. And then the further out you go, the more you're paying for time, right? So you pay a higher value to control those 100 shares, right? But you're buying yourself more time. And then as you get closer to expiration, theta starts to degrade the value of that option. So as you start to get closer, you want the option to move up in price, right? So that theta is not hurting it as much. So when we're looking at taking a trade on the daily chart or the 130 or the 195, what we want to do is take an option that is at the money or slightly out of the money. Let me see if I can pull up there we go. So we're talking a 50 or a 60 delta, right? So for this, it would be a 66 or a 67 strike, right? That means that for every dollar move in the underlying stock, your option is going to move 50 cents, right? That's how delta works. If you buy way in the money, your delta is higher. So you're going to get a larger dollar move in your option for a dollar move in your in the underlying stock. That's how you look at options and the price movement for that. And then we can get into the weeds with gamma. That's the acceleration of that price movement. But for now, really the important part is just to know what delta means and how that affects your option price. Right? And we go into this, I don't know, probably, maybe once a week or more when we're talking options with people in the room. So if this all sounds garbled and like French to you, that's okay. It's easy to pick up. You'll get it. We also have tons of videos on these topics as well, because they're important to understand, right? AMG trades, the indicator here at the bottom that I'm showing is the squeeze indicator that Nate Bear uses for his TPS trades, right? And the Nate bot just put in a chart setup for Nate Bear's TPS setups. The trades for the challenge will be posted. We have a challenge website page that will show the trades and will show where everybody is, the three of us, in the standings. So they'll send that out on Monday, I'm sure. So when we are on a 30-minute chart or a 10-minute chart, right? Or in my case, like on a 30-minute chart, let's say we were playing GM on a 30-minute chart. We could take an option expiring next week, right? Because most likely next week's expiration, the 30-minute chart is going to resolve itself within a week, right? A 78-minute chart probably need 2 weeks. The phrase is, when in doubt, go further out, right? On a daily chart, you probably need to go out like a month, generally recommended, right? So just being aware of where you are in the time frame. And then also when you're managing these trades, as you can see here, because we put this on a 130-minute chart, right? The stop under 86, so this level here is 86. We're just a little bit below that, is 86. The stop on is under 86 on a 130-minute chart, which means 130-minute candle body needs to close below that level. So I'll use my other drawing tool here. So if we're watching this and tomorrow morning, right, we get this candle, let's just say, hypothetically speaking, let's say that's the candle tomorrow morning. Should we stop out of that trade? We're on a 130-minute chart right now. Right? No. Now, is it going to be scary when price, opens right here and dips all the way down into our stop area? Yeah, you betcha. What will that look like on a 5-minute chart, right? It's not going to look like that, and I'm not going to draw each individual candle, but what that'll look like on a 5-minute chart is, gap down a little for open, and then price moves way down into past our stop area, but then starts moving right back up, right? And then after that 130-minute chart, our candle's up there, right? So our candle body is green and it looks like that, or hollow, and our wick comes all the way down like that. But this green line was our stop level. So being aware that you're playing something on a 130-minute chart can keep you from stopping out staring at a 1-minute chart. I determined the stop area for this specifically because volume profile, if, let's see, I'll show you. So if I do volume profile for just this area, right, it shows me point of control down here, and then value area low. Value area low is where price or volume at price drops off, right? So it kind of creates a support level. But then also, if we get rid of the volume profile, you can see support levels created, right? We have a low here. This one wicked through a little bit lower, but that's okay. Support here, support here, support here, support here. So this is clearly a support level and clearly a volume area low, right? We call that a volume area low. So for this pattern, below that's going to be my stop. Does that make sense? So, once you get used to looking at charts, you can see these pretty easily. But you have to, it takes time looking at charts, marking them up, asking questions, having somebody like myself or Nate or D-Man talk about that chart and why they see what they see, right? And then you start to see it. And then you can't unsee it. Then it's just there. Yeah, I'm not using the wick to close. So if I take the trade on a 130 minute, for me to stop out, I need a 130 minute candle to close below my stop level to stop out. Matt, I stop out when a 130 minute candle closes below my level. Yeah. Does the add area only have one initially anywhere in that red zone? So this red zone, this is just a feature that TradingView has when you are trying to figure out if this is a trade that's worth taking. You can put this long position box on or short position, right? You come over here and basically what happens is you click it right where you're thinking about taking the trade, and then you have to move these things. I move this up to my stop area. I move target up to here or up to here, depending. And then I can see, this is a 1 to almost 8, 1 to 8 risk reward, right? Generally, we're looking for things in the neighborhood of, 1 to 2 or 3 or better, right? What you don't want is, your target to be here and your stop loss to be down here, and then you have an inverted risk to reward. So all this is also something that you can you just learn to see on the chart and know if it's a good risk reward or not. But this tool can help you learn, right? Surfing, yeah, you can set up the stop for automatic execution. But like I said, if you set an automatic execution for, let's say, right here, right, roughly, and, tomorrow morning we get a little bit of a flush, right? And so your 130 minute candle looks like this, right? Which now is, now price is all the way up here after 130 minutes, but there was a little wick down and through. That's market makers running stops and then pushing it back up in, right? So there's two kinds of things that can happen. You could also break that low, right? The candle could end up looking a lot worse. Okay, let me see if I can get the square to come back. Come on, square. It doesn't like me. Fair. Okay, there's the square. Now if you did this and it's a red solid candle, you're probably going to want to stop out, right? Because now that red candle has closed below this level, and there's kind of two things that happen when we break a pattern. We can push lower and then we come back up and we retest that level and then roll over further, right? And a lot of people will say, okay, I'm going to try and bounce this from here. And they're like, yes, it's working. And you come up old support, when it's broken, becomes new resistance, and it's just boom, a little test, and bang, a rollover, right? So there's two things that can happen when we break a level, right? We can break it and roll over, or we can basically run stops. The bullish one is run stops and then reclaim and go, right? And that push through is just market makers running. Clearly, people are going to have stops set right in here, right? Because this is a support level, and they'll run those stops, grab that liquidity, and then move that price right back up. Yeah. So when you do get a clear support level push down, it's usually good to not panic. Sometimes you're just getting a bunch of selling that day. If it pushes down through there and the Qs are flushing and the SPY is flushing, like that's just a sell-off day, and I will cut that before a 130-minute candle closes. But if it's just on your name, I usually like to wait and see what happens. Right? So does everybody understand, before I jump off here, does everybody understand the how to choose an option for the chart that you're playing? Right? I want to make sure you understand, on a larger term time frame chart, when we're playing TPS, you want to buy further out, give yourself time. On those shorter dated options, on those shorter dated charts, like a 15-minute, a 30-minute, you can, maybe even a 78-minute, maybe you're out 1 to 2 weeks. On a 5 to 10-minute chart or a 1-minute chart like I play, those are same day to same week option expirations. But if you're ever in doubt, go further out, right? It's never going to hurt you. You're just going to pay a little bit more for each option to go further out. No, we typically for TPS are kind of trading that at the money 50 delta. But many people will trade way more in the money, right? So you're paying up to be further in the money. And you get a larger movement in your option price based on movement in the option, in the underlying stock. But generally we're taking those trades kind of at the money. So, but that's a preference thing. Oh, that's great. I'm glad it helped, Linda. Yeah, I'll get this posted up as soon as I can. And also understanding the candles and what they mean. Like if you look at this candle right here, right? What does that mean? What happened in the market during that 130-minute time frame? Right? Price opened, immediately flushed, right, through potential stop area, and then worked its way all the way back up to basically its start price. And so if you look at that and you see one of those candles developing later on in something you're in, boy, what a great place to add as it pulls down. Maybe get a sniper entry on a shorter term time frame on that turnaround. Those are great entries because they get you entries potentially right near that support level. Yeah, it's a sign of a flush. Maybe a stop run here on a previous low, right? Help develop the rest of this support level. So just sort of understanding. A lot of times what you'll see it here again. Like if there's a name you're watching, let's say we were watching this name, in somewhere in here, right? And we say, oh, this kind of looks like an interesting play. Let's set up a trade on it. Well, maybe I don't want to take a trade right now because, we're way up high. Well, in the morning, a lot of times what you'll get in the morning on a great pattern is you'll get a candle that sets up like this one right here, which means you open, kind of spike down, get a potentially great entry, and then move yourself right back up, right? And those are great spots if you're watching it and you already have your chart marked up and you already know where that support level is. Those are great charts to be able to say, okay, I'm not ready to enter this, but when it comes into this level, I want to enter it. And then you can, come in here on your chart and put an alert slightly above that level, and then an alarm will go off when price comes into that level. And then you look at the chart and you've already got it marked up and you know what your plan is. You say, oh, great, I want to take the September 4th $87 calls into this level. Perfect. I pull up my GM, I go to the September 4th, I grab the 87s and I buy them because I've already developed the plan in my head and I'm not trying to figure it out all on the fly. Well, once you know how to do it, you can do it on the fly. But really, if you already have a plan set up, let's say we were looking at this yesterday. Great pattern, but look, we're way up here. Why would we want to do a risk reward that's 1-to-1? That's a terrible idea. So I'm going to put an alert in there and I'm going to wait. And I'm going to see if I can get a better price. And lo and behold, we got a better price yesterday and today. Yeah, you can go out years. Not too many years. You can go out a year. You can go out 2 years. Yeah, D-Man does it all the time. All right, D-Man, are you coming after me? That's right. It's right at time. Are you ready to take this screen? Okay. That's it for me. That's my last session here on the open house. I hope you guys join us. It'll be a fun week tomorrow, getting everybody dialed in and on board and getting the small account challenge started. I'll try and get this posted up as quickly as I can, but looking forward to seeing everybody in the room on Monday. Okay? I'll talk to you guys later. Take it away, D-Man. Anytime.